Silver is trading at $71.94 per ounce as of December 25th, 2025, near all-time highs. But in China, it's effectively hitting $80 per ounce equivalent due to massive physical buying and logistics squeezes. COMEX vaults just saw over 3 million ounces withdrawn in days, signaling a liquidity crunch that's forcing premiums sky-high overseas. This isn't just a price spike. It's a warning of deeper supply strains hitting the U.S. markets right now as industrial demand collides with tight inventories. Why does this matter today? For U.S. investors, it means potential volatility in silver ETFs like SLV, higher costs for solar and tech manufacturers, and a hedge against inflation as Fed policy stays cautious. With global deficits projected at 95 million ounces for 2025, the fifth year running, physical shortages could push U.S. prices higher fast. What you all learn in this video: why China's 80s silver premium reveals a global liquidity crisis, latest COMEX inventory drains and what they mean for U.S. buyers, silver supply deficits explained simply for beginners, how this impacts U.S. stocks, inflation, and your portfolio, balanced risks ahead, no hype, just data. Think back to 2011, when silver peaked near $50 amid similar vault squeezes and industrial buying. COMEX inventories dropped sharply then, just like now. Over 3 million ounces pulled in late December 2025 alone from vaults like JP Morgan and Loomis. Differences today: solar panel demand has exploded, eating 200+ million ounces yearly, while mine supply grows only 1-2% annually. The 2020 COVID shock showed parallels too. ETF inflows surged as investors fled stocks, much like SLV's recent gains. But 2025 adds China's aggressive stockpiling, turning regional premiums into a global signal. Silver spot closed flat at 71.94 OZ on Deck 25, up 34.85% in the past month alone. In China, local prices hit 502.86 CNY OZ, equivalent to about 80 USD at current exchange rates due to import delays and panic buying. COMEX registered stocks stand at 451 million Oz as of Deck 24, but massive withdrawals hit: 589K Oz from Asahi, 1.2898 from JP Morgan, totaling 3 million Oz gone in days. That's a 0.35% weekly drop, with monthly deficits at 2%. SLV ETF saw strong inflows earlier in December, with 250 influxes reported recently, reflecting U.S. investor rush amid deficits forecasted at 95 Oz for all of 2025. Silver's dual role drives this: 50% industrial, solar panels, EVs, electronics, 50% investment. Supply is inelastic. Mines can't ramp fast. Recycling lags, leaving deficits. China's demand spikes create premiums. They buy physical bars, draining exports to U.S. vaults. Liquidity crisis? When physical claims exceed paper contracts, prices diverge. COMEX delivers or premiums explode like China's $80 now. For U.S. markets, falling DXY, dollar index aids, but Fed's steady rates keep real yields positive, capping runaway gains. U.S. manufacturers face higher input costs. Silver's in every iPhone, EV battery, solar panel. Inflation hedge? With CPI steady but deficits structural, silver outperforms stocks and uncertainty. Stock market tie-in: tech and renewables rally, solar ETFs up, but miners volatile. Portfolio angle for beginners: 5.10% allocation hedges, inflation without stock beta, Fed policy matters. Rate pauses could boost if recession fears grow. This liquidity signal echoes 1970s shortages, protecting savings as dollar weakens. Bull case: deficits persist. Fifth year, China/India buying accelerates. Green energy boom: 80+ stas to USD possible if inventories drain further. ETF inflows continue. Bull case: continued industrial demand, plus safe haven flows amid geopolitics push targets to 77 or 80. Bear case: profit-taking hits after 35% monthly run, Fed hikes real yields, economic slowdown cuts industrial use, pullback to $68 support. Inventories stabilize on recycling. This analysis draws from public sources like COMEX daily reports, Silver Institute surveys, and spot pricing through Deck 25 2025. Markets evolve quickly. Verify latest data. For education only, no predictions guaranteed. This is not financial advice. Silver markets are volatile. Prices can fall sharply. Do your own research and consult a licensed professional before investing. Past performance doesn't predict future results. Do you think China's $80 silver premium will force U.S. prices higher? Or is this a top? Comment below. Hit subscribe for weekly macro updates and turn on notifications for the next inventory report breakdown.